Previously, we talked about how we can increase profitability by doing one of two things. We can increase revenue or decrease cost. In the previous section, we talked about the cost side. Now we're going to talk about revenue and pricing, which is a bit more exciting. For business owners, pricing is one of the really strong levers that you can pull to increase your profitability. So in this section, we're going to be talking about why it's so important, how you can do it, best practices, tips, and things to avoid. Okay, let's jump right into it. Pricing products or services is key to your profitability. This section will educate business owners on the different pricing strategies available and how they can be applied to their business model. Topics will include cost plus pricing, value-based pricing, and competitive pricing. The section will also guide owners in analyzing the market and cost, assessing customer value perception, and adjusting pricing to maximize profit margins while remaining competitive and attractive to customers and clients. So the first one that we're going to talk about is cost plus pricing. So what is it and how do we apply it? Cost plus pricing is a strategy that involves adding a markup to the cost of goods sold to determine the selling price. The markup covers overheads and ensures a profit margin. And you apply it in this way. So cost plus pricing is straightforward and ensures that all costs are covered. However, it doesn't account for market demand or competition. It's most effective in industries with relatively standard cost and low competition. So what we're doing is we're taking a look at all of our costs and we're adding a fixed percentage on top to account for a profit margin. That's the cost plus, which is cost plus profit. The next pricing strategy that you can employ is value-based pricing. So value-based pricing sets prices primarily on the perceived value to the customer rather than on the cost of the product or market prices. This strategy can command higher prices and margins if customers believe they're receiving significant value. And then to apply it, here's what we do. To implement value-based pricing, you need a customer's understanding of your customer's needs and how they perceive value. This strategy effectively differentiates products or services where you can clearly communicate the benefits and justify a premium price. And then the third pricing strategy is competitive pricing. And here is the definition. Competitive pricing involves setting prices based on competitors' charges for similar products or services. The goal is to stay competitive while aiming for a slight pricing, quality, or service edge. To apply it, this strategy requires continuous market research to stay updated on competitors' pricing. It's suitable for markets with many competitors offering similar products or services. While it helps attract price-sensitive customers, it can lead to thin margins if not carefully managed. Now let's talk about the pricing strategies that you can employ for maximum profit. The first is analyzing market and cost. So to do a market analysis, you're going to understand that the market is crucial for effective pricing. You want to analyze customer demographics, purchasing behavior, and sensitivity to price changes. You want to identify how your product or service fits into the market and the unique value it offers. Cost analysis, on the other hand, is where you calculate your total cost, direct cost, including direct cost, materials, labor, and indirect cost, overhead, and marketing. When you understand your cost structure, it becomes key for setting prices that cover costs and achieve desired profit margins. And then another key element here is assessing customer value perception when it comes to figuring out the best price strategy. So to do this, you want to conduct surveys, focus groups, or one-on-one interviews to gauge how much customers will pay for your product or services benefits. Understanding customer value perception will allow you to align your pricing strategy with what customers believe your offering is worth. When it comes to adjusting pricing, there's 3 factors to keep in mind. 1 is flexibility, 2 psychological pricing, and 3 discounts and promotions. So with flexibility, be prepared to adjust your prices as market conditions, costs, or value perceptions change. Regular reviews will help you stay competitive and profitable. Psychological pricing. Consider psychological aspects such as setting prices just below a round number, $9.99 instead of $10, to make the price seem lower and make it seem like people are getting a better deal. Discounts and promotions. Use discounts and promotions widely to boost sales without eroding the perceived value. You want to ensure that the price reductions are strategic and temporary. And in conclusion, to talk about price strategies, selecting the right pricing strategy is a balancing act between covering costs, providing value, and staying competitive. By understanding your cost, assessing the market and customer perceptions, and being flexible, you can set prices that maximize your profit margins while remaining attractive to your target customers.